Hey everybody, Frank Finance here. Hope you're having a wonderful day. Over the last 2 weeks, some of the biggest tech names in the industry have seen massive drops to their market value after earnings, and I want to go through and line them up side by side so you can see how they've all performed and see if it's warranted. Also, I want to show some historical information and some forward information about revenue growth and earnings, and then also see that side by side and see and judge it for yourself. Also, at the very end, I'll give my input on it just because it's my video and I can do that. As you watch throughout this video, if you like it, please consider subscribing. Also, remember there's a like button, so please go ahead and tickle it. So next up, I want to show the price performance after earnings so you can kind of understand what the drop or gain was in proportion to what they reported. So the first up it reported was Netflix, and they had a huge 20% drop. Next up, we had Apple, and that's in blue here, and they had a little bit of a gain, and they've been up since then. Next up was Google, and they had a pretty big, earnings there. Next, we had Facebook, which was a massive disappointment, and that was another 25. I think they're down near almost 30% now. Then after that, we had Amazon, which looks like their earnings was on this date. Actually, they were going down because of Facebook, and they had a huge jump up after their earnings as well. So I think I covered everybody, but that's the price performance after earnings. So keep that in mind as we go through this and see if everything looks proportional to you. All right, so now we have Q4 earnings all side by side for all the Faang stocks, including Microsoft. We have our revenue, we have our earnings per share, we have our beat whole number, and we have it by the percentage. So I'm going to be going over the percentages because that's a better comparison. So looking at Facebook first, they beat revenue by a little more than 1%, or a little less than 1%, and they missed their earnings per share by about 4%. That's what beat up Facebook. Now moving on to Apple, they beat their revenue estimate by about 4.5% and beat earnings per share by 11%. Amazon missed their revenue expectations by 1%, and they actually beat their earnings per share estimate by about 700%. There's some gains here from Rivian. I'll talk a little bit about my opinions on that later. But moving on to Netflix, they beat their revenue expectations by 41%, and they also beat their earnings per share estimates by 38%. Google by 5% on revenue, and they also beat their earnings per share by 12.5%. And Microsoft was up 1.2% over the analyst estimates on revenue, and they beat by 6.9% on the earnings per share side. So with those earnings results in the back of your brain, let's move forward and look to see what these companies plan to do for the next year based off analyst estimates. We're also going to look at their historical growth of both earnings per share and revenue and compare it to what analysts are projecting them for this next year. All right, so on here we have our revenue growth in the last 3 years. We have our earnings per share growth in the last 3 years. We have our revenue estimates for the next year, full year 2022. And earnings per share estimates for 2022. One thing to note here is Facebook, Amazon, Netflix, and Google fiscal years end in December. Apple's ends in September, and Microsoft ends in June. These revenue 2022 growth numbers are based off of their fiscal years, not calendar years. So this is ending in December, this ends in the June quarter. So just keep that in mind for comparison purposes. Now, moving forward to revenue growth. In the last 3 years, Facebook hit 26, 21, and 37%. Just so you're aware, anything in green is above 20, yellow in between 10 and 20, and then anything below 10 is going to be marked red, and it's just for me to look and do quick comparisons. So just keep that in mind. It may mean nothing to you, but it means something to me. Now, revenue growth estimates in 2022 by analysts are 11.9%. In their latest quarter, they gave guidance. Facebook gave guidance to 3 to 11% growth in the first quarter. So if they hit that 3%, it's going to be a little bit challenging to hit that. I will say that analysts did lower their estimated revenue growth from 140 before earnings down to 132. So there has been some adjustment, and they may further adjust this down. That's just what's the latest. So that is one thing to keep in mind. Now, on the earnings per share growth for the last 3 years, they had negative 15% between 2018 and 2019, 56%, 36%, and their earnings per share growth for 2020 2022 is estimated to be negative 6% or $12.93. So I believe this is really the more concerning piece, not really the growth. That's my take on it. Now moving on to Apple. They had revenue growth of negative 2%, 5%, and 33% in the last 3 years. Their revenue growth for 2022 is set at 7.9%, and their earnings per share growth for the last 3 years was 0, 10, and 71%. So you can see they're going in the right directions on the EPS growth. And the earnings per share growth is about 8.5% for in line with what their revenue estimates increasing are. Now moving on to Amazon, their revenue growth has been slower here recently from 20, 37, 21, and anticipated 15% in 2022. And their earnings per share growth is 14, 81%, 54% in this last year, and expected negative 25%. I find this a little hard to believe, but I would need to look into this a lot further, why it's dropping from around 60 something to 80, 84. But you may want to look a little bit more into this. I probably will myself. Next up, we have Netflix at 27%, 24, 18, and then expected 12%. So you can see that they've been consistently moving down in the last 3 years, and expected to move down even further in this coming year. Earnings per share growth at 54, 47, 84, and basically is anticipated to be flat for 2022. That may not, I believe they beat big on earnings per share this last quarter, so that this may not be factoring in that big beat and maybe any expected increase in earnings per share moving forward. So just, again, keep that in mind. And then Google, they had 18%, 20 something. I'm getting this dyslexia going in. 12.7, 41% for the last 3 years, and then anticipated about 17% for 2022. I think this is the second highest among all these estimates behind Microsoft. And then we have 12, 19, and 95% earnings per share growth. Again, this earnings per share growth is just astounding for, just in comparison wise here, only second, only below Apple and Netflix, or not below, but beating out both Apple and Netflix. And their earnings per share estimate for 2022 is actually negative, just like, or actually, I shouldn't say negative, but it is fairly low. And then Microsoft is around 14, 13, 17% in the last 3 years. It looks like they're actually growing in their revenue growth compared to majority of the folks here. They're the ones that look like they actually have some expansion. Rather, it seems like most of these are contracting or sporadic in nature. There's some consistent looks to be growth here. And then on the earnings per share side, 137, 13, 39, a little bit more sporadic on the earnings per share side. And then it anticipated 17.7% earnings per share in line with their revenue estimates. All right, now for my thoughts. When we look at 2022 growth estimates for these companies, I'm not really seeing anything that's very exciting as compared to what they were doing previously. So I urge you, go back, look at the slide, see what is happening, compare them to their previous growth rates, and see, does that, in most cases, it's down. The only company that looks like it has some expansion is Microsoft, and it's not that convincing at that. On the earnings per share side, we have earnings per share growth in 3 of these 6 companies actually negative. We have Netflix, Amazon, and Facebook expected to have negative earnings per share growth. Apple at 8.5%, which is still red because it's low. Red for me because it's below 10. We have Google at only 3%, and we have Microsoft at the only positive one here. Technically it's yellow, but I have it in green for whatever reason. But it's at 17.7%. So things you got to be asking yourself is, do you think these earnings per share estimates and growth estimates are off? Do you think these companies are reaching market saturation? Will they continue to struggle with their growth over the next several years? And by struggle, are they going to see a continued decrease in revenue? Now, some things to think about is these are very large companies. They're some of they're the leaders in their industries. They've grown at tremendous rates over the last few years. So what are your expectations for them moving forward? Are you expecting them to continue to grow at the same clip rate? Are you expecting earnings per share to start to expand? Start to understand and start to set these expectations for the companies. And that helps temper your expectations when you go towards these earnings releases, especially into 2022. Also, it's good to know what they're expecting for 2022, so you can set your price targets and know what you want to do with these names. So again, not telling you to do anything with this, just some things to think about. I presented the numbers. Now you get to go think about it and get to make the hard decisions. If you want to see my latest videos on Google and Facebook, go ahead and click the links right here. Please like this video, hit subscribe if you're new to the channel. I do videos on personal finance, investing, and stock analysis. Thank you so much for watching. My name is Frank Finance, out.